I'm sure the comment's going to come back here shortly. Welcome into the Roundtable. Bill Priestley here alongside Zach Strickland, Tony Mulvey. And we're going to talk about the third quarter earnings that we've kind of seen so far, but also getting into the fact that capacity is still, again, looking for normalcy, looking for balance. When is that going to come here, guys? And so you got a chance to look at your chart of the week, which came out on Saturday. So let's take a look at the first chart we have here. And Zach, kind of take us through where you were going with this article and in terms of seeing this thing balance out, hopefully, eventually.
Yeah, I mean, this chart is really just the illustration of the amount of growth in supply side dynamics in the freight market. We're looking at total trucking authorities in the white line there, and that is based on carrier details, doing a little bit of work cleaning up some FMCSA data to get us the total operating authorities. And, you know, we rarely, if ever, see this thing move down. If I were to pull this out over 10 years, it's harder to look at, but you don't see a lot of deterioration. And of course, the scale of growth here during COVID is unprecedented. And just like the OTVI, which you see there in green, that's the, our OTVI monthly index that counts the total number of tenders from shipper to carrier. So you can see the growth in demand and then the subsequent growth in supply. And the point is that supply growth was 49% based on this chart, and it's 16% growth in demand. So the scale of growth in supply has far outpaced and sustained beyond that point where demand has sustained. We saw a huge deterioration in demand in March of last year, and that is, we're starting to see a little bit of an uptick, which is invisible to the market.
Yeah, so let's take this to another sense, because you're looking at third quarter earnings, which are just coming out now, and obviously, to no one's surprise, things are down across the board, basically, unless you're a manufacturer. You're usually looking at pretty good in those rooms as well. But so, Tony, I'll ask you first, in terms of people like to make decisions based on their pocketbook. They've lost money. They've seen this now.
Yeah,
you make the logical conclusion or no?
I think it was obvious to a lot of these companies that it was going to be a challenge this year, dating back to this time last year. I mean, they know it's a cyclical environment. They wouldn't be CEOs of these transportation companies if they didn't understand the cyclical dynamics of the market. I think one of the interesting things that goes into Zach's chart is looking at OTVI and seeing that growth. Well, we've seen economic growth, right? I mean, GDP number came in at 4.6 today, 4.9, somewhere in that range. Like, what's interesting in this factor is the Fed has pulled the levers to deteriorate demand and slow growth, and it hasn't happened. I think that right now, and I think you've seen it, they're planning. These transportation companies are putting themselves in a position to where when the market does, eventually the capacity leaves the market, because that's what's going to have to happen, because you're not going to see a demand spike like what we saw throughout COVID. They're positioning themselves to be ready for that swing, because really right now they're kind of subject to the market like everyone else. Like, they can only cut so much headcount. They can only try to reduce cost by so much, right? They start cutting into the bone, per se, when they try to lean out. And I think that's some of what you see in freight tech companies. I mean, Convoy is a good example. They cut a lot of people to reduce that burn, right? Very different dynamic, but same concept, right? And then they're so lean that there's nothing else to cut. They have to position themselves in a way to take advantage of a recovery. Mm-hmm. They're all just trying to game or guess when that's going to happen, right? I mean, basically what we're doing is trying to figure out when that's going to happen. It could be, it seems unlikely, it could be Q2, it could be Q4, it could be of next year, it could be into 2025. Yeah. That's the unknown, because that demand side and where rates went actually beefed up pocketbooks for a lot of the smaller carriers. And it's really hard to see their financial position, right? We can see what the large carriers, the publicly traded ones, how they're positioned and what their fleet looks like, but you can't see what the small owner-operator's fleet looks like, and I think that's a key.
And Craig Fuller, of course, wrote a great article about brokerages that help keep the little guy kind of in business as well. But as far as making those decisions, again, Zach, where do you see anything in terms of how people are moving forward, how CEOs are making decisions in terms of, obviously not coming, I've learned my lesson, I'm not going to say normal, but coming back to some sorts of balance where you have at least, are we simply waiting on the economy?
Yeah.
Or is it something else?
Yeah, the economy at this point is somewhat, I don't want to say irrelevant, but in the context of the freight environment, the freight environment is on such a strange and new historic playing field in the terms of supply-demand balance. Mm-hmm. Supply has never been at this level of oversupply. And it's because demand had never been at the level that it was during COVID. And this is the definition of an economic bubble that has been overheated. And it's going to take time. You see the chart showed you the total operating authorities, how slow that is compared to demand side dynamics. I actually wrote a chart of the week earlier in the year talking about how demand was actually the more important thing to monitor. Because, number one, demand's easier to see. I mean, OTVI does a really good job of doing it, but also just other things. It's very easy to see. Supply, even with this chart, to postulate exactly where that figure goes down, because you have so much fragmentation in the market. You have small carriers, large carriers. They may not be in the right position. Network imbalances make it extremely challenging to really point to a place where we are in equilibrium. I think Joe Antoshak, and you talked about this a few weeks ago, and he came up with a really interesting, kind of dynamic kind of model that showed us where optimal utilization was, and we're still pretty far away from that. And I think that's kind of the foregone conclusion.
You said 25% back, I think, in February or so, and then his model was we're basically 10% high right now.
Yeah, and
or at least a few weeks ago
compared to utilization. And I think our two models actually line up really well if you count the fact that 25% number was really this is what carriers were covering. Mm-hmm. Like, he's saying that you just need to get back to a point where you have about 10% excess capacity. I was saying that 25% was the total delta to where there was a one-to-one connection. So we were actually a pretty close alignment. I really liked his model, though.
Okay. Tony, what's the metric that, obviously demand need to be followed, but what's the metric you want to follow?
Well, I mean, the other one would be OTRI, right? Looking at the supply side dynamics. Yes, we can track authorities, and it's great because it actually lends credence. But as Zach alluded to, there's this supply, the imbalances, right? And OTRI helps kind of show those imbalances on a daily basis. And that's the other thing is what is equilibrium? Because really, when you think about it, there is no true equilibrium, because you could have, say you have 100 tenders in a market on Monday, have 100 trucks or 99 trucks cover it, thinking that you're going to have 100 tenders on Tuesday. So you send 100 trucks in. Well, now there's only 99 tenders. Well, now you're imbalanced. Conversely, you have 99 or 101 or 99 one day. You send in 99 trucks. Well, now you have 101 the next day. You've been imbalanced for 2 days, but the actual level would have been balanced the same as it was on Monday. By Wednesday, it's out of balance. So, really, on a day-to-day basis, there is no equilibrium. It is a market that supply and demand will never perfectly align. And I think that's the key.
You've got the freight market is naturally unbalanced towards a origin and a destination point. We've got production centers in the United States and consumption centers positioned largely around the megalopolis in the Northeast, and then, of course, around the Midwestern points as well. But you need to have slack. I think is the point here. And one of the things, I think tender rejection rates are probably the best indicator that we can look at in terms of seeing, like Tony said, where this equilibrium is. One of the charts in the chart of the week, the VOTRI, FOTRI, and ROTRI figures. I alluded to this as kind of the canary in the coal mine. You see the flatbed tender rejections in green, refrigerated in blue, and the van general commodity freight there in white. You can see the van freight, of course, represents about 70% of the total volume in the United States. Refrigerated, roughly 20-ish, 15 to 20-ish, and then flatbed, a little marginal percent down below that. And The refrigerated rejection index here is showing us that that sector has become increasingly volatile in terms of capacity correction. So that's a smaller fleet bias in that data. In that specific sector, of course, refrigerated is very unbalanced compared to van. And the fact that we're seeing this kind of divergent behavior tells me that we're actually seeing meaningful correction on the capacity side already.
Excellent. So if I could wrap this up into one question, if there was a lever that you could pull anywhere that could possibly get us, again, not to normalcy, not to equilibrium, but somewhere back to some degree of familiarity, if you will, what would you pull, Tony?
Oh, that's a tough one. I mean, it's not really a lever. I mean, the levers are being pulled, right? You have interest rates going up, fuel prices going up, rates going down. Those levers are being pulled to force capacity out of the market. That's what has to be done. It's happening. It's just not fast enough for the market to feel anything.
Zach?
It's got to be capacity. I mean, you've got to pull the lever down on capacity to get it down to a level that's manageable. Right now, it's just too much. I mean, we're having economic growth, and you can't tell in the freight market.
Yeah, this is very interesting. You asked the CEO to make that decision?
Yeah, right.
All right. Okay. We'll take a break. We'll come back and wrap up this edition of Freight Waves. And after this, thank you for joining us here on our Roundtable.